Hey everyone, it's Nick, and I've been trading for a little over 9 years right now. And over the course of the past 9 years, I've made millions of dollars trading Forex, and then I added stocks in 2019, and then I added cryptocurrency aggressively in 2021. And so across all these markets, I have learned that the basis of my trading and investment approach has always relied upon simple support and resistance trading. So here in this video, I'm going to show you how I was able to make millions of dollars trading for support resistance with Forex, crypto, and stocks over the past nearly a decade consistently. And I'm going to show you how you can grow your account very quickly with a very high risk trading approach, but very simple using just the concept of support resistance with some basic risk management. I've always believed that over the course of these past few years, especially the past half a decade that I've been trading, that the only two things that a person really needs to be profitable is simplicity and then risk management. If you keep things really simple, it's great because that allows you to have a little bit more predictability and consistency within your trading outcomes. So for example, if you're consistently losing or consistently break even or ideally consistently profitable, if you have a simple set of criteria, a simple approach that you use, it allows you to develop that sort of stasis and you being able to continue to do the same thing over and over again without having like the foggy lens of emotion that blinds you and causes you to make really stupid decisions in trading. Now, I've been through all this myself, so this is how I've learned all this. I've learned through this almost the past decade of experience of doing these things, making all the mistakes, and that's what's happened to me. So perhaps I can help you figure it out. And that second thing, risk management. You have to have a way to structure risk, whether that's high risk or low risk, or you'd call moderate risk, whatever the hell those words mean. You have to structure risk in such a way where you know what you stand to lose, right? Should the trade lose? Should the account blow? And you don't really want to risk anywhere near all your trading capital on one specific outcome or one tiny subset of outcomes. The random distribution with your wins and losses can be really aggressive at times and really volatile. For example, you can have a win streak of say 5 trades in a row, but that also means you're going to have a losing streak of 5 trades in a row, right? It's just statistically 100% guaranteed to happen. If your win rate's like 50 to 60, even 70%, you will lose multiple consecutive trades in a row. And you just want to make sure that you've sort of defined what your risk is. So that way you know exactly what you have to stand to lose. So we're going to talk about simplicity and risk management in this video, and we're going to talk about simple support resistance trading. So let's have a look. What we're going to do is I'm going to showcase this just randomly on the chart. I'm going to go here to, this is a random number generator. And we're going to be using this. And we're going to select a number between let's do 1 and 20. Okay, so we've got 3. So let's go to all my Forex pairs here in TradingView. These are the 2 crypto pairs that I currently trade and invest in. And then all the rest are just the Forex pairs. So we'll use the third one of the Forex pairs. So 1, 2, 3. So this is Euro AUD. Now what we're going to do is we're going to go to the 4-hour time frame, and then we're going to hit the replay tool. The replay tool here in TradingView allows us to just go back to a random area. I have this set to a random bar at the bottom. So it's taking us back here to, it looks like October of 2022. And what we're going to do is we're just going to be using these concepts of simple support resistance trading to show you how you can grow an account, and in this case, double it. I want to say this before we get into here because it's pretty exciting and it's cool stuff, and I love doing this stuff. I've been doing this, like I said, for almost a decade. I've been teaching for 7 years, 7.5 years now. I love everything to do with trading. I love working with people. I absolutely love this stuff. However, that being said, trading is really risky. And I'm not just paying lip service to that. If you do not structure things appropriately, if you do not get the right education and figure things out in the right way and get experience in a controlled way on a demo account or a simulation account, then you are almost guaranteed to lose money. And I say that because the stats of success is in the low single-digit percentages of people who actually make money trading. It's abysmal. It's terrible. Even people who have worked with me, I've worked with over 4,000 clients over the past nearly a decade, or I guess I should say 7.5 years. And of those clients I've worked with, the ones that get profitable is generally not much higher than the industry average, right? It might even be on par with the industry average, but for those of them who gets profitable, it generally just takes them a lot quicker. That's why we become a lot more selective in screening clients before they actually come and work with me and my team, just because we can kind of pick and choose who we think is likely to get profitable to sort of increase that success rate. But that being said, trading's risky, and yeah, most people lose money. So you should be very, very careful when you're doing this. And I'm not a financial services provider or a financial advisor. I'm not professionally licensed in any of this. I just trade. Like, I'm just some guy who trades here in Fort Worth, Texas. So that being said, we'll get into it, but this can be really risky, and you should never risk more than you can afford to lose. Just trade on a demo account for like a year while you develop consistency and set aside some money to allocate to trading. And then if you're profitable in demo after a year, then maybe come in and do trading. Okay, so here's how I start off. So whenever I'm trading, what I've found works consistently in Forex, at least for me, is using the higher time frames. Every time I've gone down to the lower time frames, it never seems to work as well as the higher time frames. I've made approaches work on the lower time frames, but you start running into issues like lower leverage, meaning, if you have to risk a lot of money to risk the same amount because the stop loss is much tighter on the smaller time frames. So your position sizing has to be huge, and it makes things a pain. And then you also have to worry about spreads, because in Forex, the spreads can be an issue. If you hold trades over the weekend like me in swing trading, then what can happen is you can then get stuck with gaps when the market reopens on, in my case, Sunday night. And it just seems to be more of a pain in the ass, right? So what I've consistently gone back to over and over is just trading the higher time frames. And the cool part about this is that if you're using the higher time frames and you're being very, very patient, it doesn't take much time to trade, guys. Like, it doesn't. If you just set aside 1 hour per day on just the weekdays to look at charts, right? And I'm not exaggerating or embellishing this. If you spend 1 hour, that is more than enough time to go through the daily and the 4-hour time frames for every single Forex pair. And the charts don't change much, right? If you're using the daily chart, you get one new candle painted per day. And then you can make the decision to enter a trade, to hold a trade, to close a trade early in profit or in loss. And that's just on the daily, right? On the 4-hour chart, you only get 6 new candles painted per day. And so with that, I mean, you're probably asleep for at least 2 of those candles. So really, the only thing that you're actively monitoring is like 3 new candles per day on the 4-hour chart while you're awake, right? Because those 3 candles, that'll be 12 hours of data. So with this being said, I really, really do believe that the higher time frames in Forex trading, while anything can work, I think that swing trading is probably the best, just at least for Forex. If you're trading a different market category, the answer might be different. But that's why you see me here on the 4-hour and the daily chart. So what we're going to do is we're going to just mark up the very clear support resistance zones. Okay. Now, this is all relative, right? If you zoom in really, really close on the 4-hour time frame, you might start drawing like a zone like that, right? Just anywhere where price is obviously bounced. If you start drawing zones like this and you say, look, it bounced away from there and then it broke back above it, and then it might come here and it might test it and bounce. When you start drawing zones like this where prices kind of cross through it a bunch of times without really respecting it, in my opinion and from my experience, the zone becomes less likely to actually work out with a profitable trade. So what I do, I just draw support resistance zones where it's painfully obvious that price has bounced there. So a couple examples would be, this would be one of them. This right here would be one of them. And I'm going to see if I can draw something here that would kind of work. This one's a little bit weirder because this last touch of the zone didn't really come all the way down into the bottom of it. and the higher out you go, right, the more you'll be able to find zones. So the current one I see right here, if we're looking back far enough, is this. Now this right here, right, this is a couple months of data, right? This is October of 2022 all the way back into like March. So it's about maybe like half a year of data. When you start going out really, really far like this and you start drawing zones like that, this is from August of 2021, right? So a little over a year before the current candle. If you're waiting for zones like that, when price is like down here in this area, keep in mind that there's a lot of zones it could interact with first before it gets there. And so you're probably not best suited spending your time drawing zones that are really far away from current market price. That's why what I do is when I go to the chart, I won't have it too zoomed in like this, but then again, I won't have it zoomed all the way out either. I'll zoom in to look at enough price data where I can see a few levels prices bounced left on the chart. Then all I'll do is I'll just draw those zones, like this. For now, that's really the only thing I see. We have areas like this on the chart where price sort of, like it breaks through it here, sort of bounces there, dips below, but then bounces, finds resistance there, finds resistance here. The thing with this, though, is it keeps breaking through it over and over again. What I find are really easy zones to trade is stuff like this, where you have just like a clear support or a clear resistance. So the idea behind support resistance is that if it comes to the zone and it starts rejecting it, then you'll make some money, right? If it bounces away and you sell at a resistance zone, for example. But if it breaks past it, then you'll lose some money. The cool part about support resistance trading is that if price breaks past the zone and you lose, your first trade, a lot of times it'll come back to retest it, and then you can just get into the opposite trade, and then it bounces away as support from the other side of it. This is just called a break and retest, right? So you have bounces of support resistance, and then you have breaks and retests of support resistance, but it's the same exact concept. Price is just bouncing around at these support resistance zones. So what I'm going to do here is I'm going to show you how you can double an account doing this. Now again, I really have to say, this is super, super, super risky. Let's just say it's a $10,000 account, right? However much capital you have to trade with, maybe it's $50,000 or $100,000 to trade Forex with. I'm just going to say a $10,000 account. It's relatively low. In my opinion, if you have less than $10,000 to trade with, then you shouldn't even bother trading live. And this is kind of a hot take, and I think like a lot of people would probably get very upset with me for saying that, because a lot of times you're told online that all you need is like $100 to trade with. You just need $50. You need, even like $500. The fact of the matter is to make any reasonable amount of money trading, you have to have a little bit of money to trade with. Okay. So in my opinion, to be able to have your full freedom and, prop firms sort of mitigate and limit your freedom just a little bit, depending on which one you use and which market you use. However, whenever you're trading with your own capital, you literally get to do whatever you want, provided you have a broker that gives you enough leverage, enough margin, and low enough commissions to not eat too much into your profits. And so that's why I think that having $10,000 to trade with minimum is the best way to approach it. If you don't have at least $10,000 to trade with, I really don't recommend you watching my videos. And I don't say that to be mean, I just say that to be honest with you. Maybe my videos might help you, but my videos are better suited to people that are sort of in a position where they have a little bit of capital to trade with, because I don't personally know how you can take $100 or $50 or $10 and grow it into $1 million, right? Like I've never done that, right? And so it would be intellectually dishonest of me to tell you that you can use a super low dollar amount to trade with, when you can't. So if you have $10,000 or more to trade with, I think that's kind of a good starting place, and ideally more, like 25K to 50K, maybe even 100K to trade with. Because if you have that dollar amount, you can really work with it to actually make some significant money, provided you're being very selective with trades and everything. So we're going to simulate just a $10,000 account here in this little Google calculator thing. And what we're going to do first, again, this is very, very high risk. You can risk 1% of your account, 2% of your account. What we're going to do is we're going to do something interesting. We're going to risk 50% of the account. We're going to put a stop loss above the zone there. And we're going to use a risk reward ratio of 1 to 2. Now, here's the simple rules for this trading approach. You go to the 4-hour time frame or the daily time frame, and you just draw the most clear support resistance zones you can find, only 2 of them, one above price and one below price. That's it. Then you just wait for price to get to one of those zones, right? It's either going to go up or down. You can see how serious I am with this video. My mom's calling me on my phone, but I'm not going to answer the phone call from my mom because I have to get this video out to you guys. So you're seeing it right now. You're seeing how committed I am. So in TradingView, you'll set an alert at one zone. And then what you'll do is you'll set an alert at the other zone. So one zone above and below price. And then you just pretty much chill all day. You wait for price to get there. And then when price gets there, this is what you do. You enter a trade to counter the market at that zone, because the idea is that if it goes up to that zone, then it might have a bounce. And then what you'll do is if it starts to break the zone and go above it, you can close the trade at any time. You don't have to wait for it to hit the stop loss. If you're using a very tight stop loss and you're risking a smaller amount than like 50% of the account, then in that case, what you can do is you can just let it hit the stop loss. But if you're risking a high portion of the account, you generally don't want the stop loss too tight. You want to give it a little bit of room for the volatility. And then if it goes into profit, the kind of basic rule is try to hold it all the way to the profit target of at least double whatever it is you're risking. Now, how would you structure this, say, if price came to the support zone, right? So we're going to play it forward here in a second on the replay mode, but let's say, it comes down here and then it starts to bounce here. Well, this is how you would structure a buy. You would buy here at the support zone. You generally want to make sure your entry is somewhere inside the zone, right? So it'd probably be something like this, maybe close to the bottom or somewhere near the top, or my personal favorite, somewhere right in the middle. And then you have a stop loss below the zone. If we're zooming in here just a little bit, I'm going to make this screen a little bit bigger so you can see it. Your stop loss doesn't have to be something like this, right? Like way down here, right? Because if price breaks the zone, like you'll know pretty quickly, something like that, you'll lose it. And you'll probably be closing it there. But your stop loss also doesn't have to be something like that. Because in that case, right, it could just come down and touch that low right there, which is at the very end of the zone. And then if it touches that low, you get stopped out, and then maybe it could bounce there still, but you've been stopped out of the trade. So in this case, I would put a stop loss maybe about right here, right? It's not smothering the trade. It's not too close, but it's not too far. And at a 1-to-2 risk reward ratio, right, if price just has a nice little bounce, just like halfway up in between these highs and lows, I guess some people would call this a range, then you get your profit target hit. And when you're right, you make double what you lose when you're wrong. So that's how I'd structure it. So in this case, the way to approach support resistance is not to look at the chart and then say, I think that price will bounce at this zone. Because whenever you start doing that, what that does is it puts your brain in predictive mode, speculation mode. And I'll tell you why that's a really unuseful thing in trading. It's because you cannot predict what will happen every time, right? Maybe 50, 60, 70% of the time you can if you have enough experience, but you can't predict what's going to happen every time. And so when you put yourself into that mindset, like, I think price will go down from this resistance zone, or I think it will bounce upwards from the support zone, that then attaches your brain to a specific outcome. So instead, here's a better way to approach support resistance trading, right? You approach it by saying, if price gets to this zone, it is worth taking a trade, because if I take a trade there, I know that if it breaks above the zone, I'll be out with a small loss, whether you close manually or whether you let it hit the stop loss. But if it bounces, you know that you stand to make a little bit more on average whenever you're right versus what you lose on average when you're wrong, right? So even with just a 50% win rate, you still make money. When you approach it like that, you move your brain away from predictive mode, and instead think of it in terms of just probabilities, statistics, and metrics like that. You think, if price gets to the zone, it's worth taking a trade there because it allows you to structure the risk in such a way where if you're wrong, you lose a small amount, but if you're right, you win a big amount. Now, you might be thinking like, okay, why can't I just go back on the chart and then just buy anywhere? Like, let's say you just sell right there, and then you just put your stop somewhere above here and your target somewhere down here. The idea behind support resistance trading is that it doesn't help you predict price, but it gives you a good way of controlling risk. Say, for example, like right where I originally drew this, say you sell like, right there on the chart, right? Where this horizontal line is. Well, you have to figure out what you're going to do if you're wrong and what you're going to do if you're right, because you can't hold a trade forever, and you can't hold it forever in loss or in profit. At some point, the trade's going to be closed. Well, if you're using support resistance, that gives you a way of saying, okay, I'll enter a sell right here. And then if I'm wrong, I'll put my stop loss, here, maybe up here. Why? And you could just look at it and say, well, that's because this is the last time it was up there. Price has bounced there a couple times. So if it gets above that zone, I want to just close the trade at a loss. But if you're right, say and price goes down here and makes a new low or goes around the previous lows there, then you win a little bit more when you're right versus what you lose when you're wrong. And what's even better is that instead of entering trades like this right here, what you can do with support resistance is, if you're going to be using that zone to put your stop loss past it, well, you don't have to enter down here, right? You can just enter at the zone and then have your stop loss in the same location as you would have, right? But now your risk reward, I mean, this is a 1 to 4 risk reward if the target's the same. But if you move your risk reward to 1 to 2 up here, risking the same exact dollar amount, the trade duration is going to be quicker usually, because it's either going to move into profit or move into stop. It'll go sideways sometimes, but usually it'll move into profit or loss pretty quickly. But if it does get into profit, it barely has to go halfway down to the previous lows, right? Like the previous lows are right there. It barely has to get halfway, and you're already out, right, in 2 units of gain. But if you're wrong, as was this case, right, it popped up and hit the stop loss, well, then it's no big deal, because, you lost whatever it is you set out to lose, which was maybe, 1%, 2%, 5%, 10%, 25%, 50% of the account. It is whatever you decide it to be, right? So this is why we use support resistance. We don't use it as a way of saying, I think price is going to bounce from there and I'm predicting that price will do that, so I'm going to enter. We just use it as a way of saying, hey, I could enter a sell right now for any random reason, but how am I going to control risk? Where does my stop go? Where does my target go? You remove that logic and you can say, okay, if price gets up here to this arbitrary horizontal gray box I drew on the chart that we're just calling a resistance zone, then you can say, okay, I can enter a trade there and I can put my stop just past it, and my target, whether it's a 1 to 1, 1 to 2, 1 to 3, the risk reward doesn't matter too much. 1 to 1 kind of gets you to break even, and it allows you to use a risk reward that allows you to kind of profit half the time and lose half the time. Using a little bit higher risk reward ratios, if you're waiting for entries at major zones, it usually allows you to capitalize a little bit more if price has a move off the zone versus what you lose when you're wrong. But it's all up to you. As long as you're holding your winning trades a little longer than you're losing trades, you can do that with a 1 to 1 and dynamic active trade management, or you can do it just with 1 to 2 and you can just hold to stop or hold the target. So that's the usefulness behind support resistance. It gives you a way of controlling risk. It is not a predictive tool. Okay, and I'm going to say that one more time because I think that it's very important. Support and resistance just gives you a way of structuring and controlling risk, but it is not a predictive tool. So I hope at least after this video you choose to not look at support resistance trading or any form of technical analysis as a predictive mechanism, but instead you look at it as a way to control risk. Because when you look at it that way, it removes a lot of your ego and your emotion and those weird sensations you get when you're inside a trade, because you are instantly removed from the outcome, right? You're just detached from whatever happens. Whenever price gets to the zone, you're like, yeah, all right, it's time to place a trade. And, I don't know what'll happen. If it goes above, it'll lose. And if it goes down, I'll make some money. And then it allows you to enter it knowing that you don't know what's going to happen, but still knowing that it's a trade worth taking just from a probability standpoint, looking at the statistics. Okay, so finally we're gonna let this play tray out. we're gonna let this trade play out, guys. I'm gonna roll it forward candle by candle, and we're gonna say we're just looking at this once every 4 hours. If it breaks above the zone, what I might do is close it at a loss. There's a chance that in one candle it could spike up and actually hit the stop loss, and then if it starts going into profit, then we'll manage it then. So this pushes high up a little bit above the zone. What I'm going to do is I'm going to extend this zone just to the top of that candle right there. This is why it's important to not have too tight of a stop loss, because sometimes price will pin past zones. That's why I prefer a little bit more dynamic trade management. So the next candle comes back down a bit. We'll get a little zoomed in view here. So it's struggling right here for the next candle. Next candle gets painted, still sideways. Next candle gets painted, sideways. So this candle starts to move down. We're going to have to see if we have a follow through though. Okay, so it looks like it's coming off the zone. It just painted a higher low. So now what we might see is we might see it try to make another break past. And even if you're just looking at this like one time per day, right? Like that's a couple candles in the 4-hour chart. It's one candle on the daily chart. These do not take a lot of time to plan and monitor, and also depending on the way that you're trading, you don't even have to really be right there to enter the trade the moment it sets up, right? Generally, like in like this, you'll have like a day or two to enter the trade sometimes. So in this case, it started to spike above the zone. What I'm going to elect to do is I'm going to elect to close this at a loss right here. So the stop loss was 300 pips. What I'm going to do is close it right there, and we're going to see how many pips this was from the entry. So about 91 pips. So we'll say it's 100 pips. So that's 1/3 of the stop loss. So if we were risking 1/3 of 50K, that's about like 17,000, right? So if we do like 0.3 times 50, that means on this trade we would have lost 15,000. So we'll do the $10,000 account. We were risking 50%, which was 5,000. And we lost only 1/3 of the 5,000. So we lost like 2,000. So we're going to do minus 2,000. The account sits at $8,000 now. So now we're going to see what would have happened. So this would have gone and hit the stop loss. So that's the beauty of using support resistance and watching the price action, is that as you're checking it, at a very slow, easy pace throughout the day, you can check it a couple times, and if the trade looks like it's not working out or it's breaking the zone, then you can just close it. The idea is to hold your winning trades whenever you do get a winner, and then close your losing trades when you get a loser. So now what I'm going to be looking for is, like I showed you at the beginning, if price comes back to this zone, I'm going to look to buy. We really need for it to get pretty deep into that zone because that gives the best risk structure. So as you can see, price went deep into the zone. I was clicking forward pretty fast on this in the interest of time. So you can see I clicked forward 3 candles from when it got there deep into that zone. So ideally, when price gets deep into the zone, it's either going to bounce or it's not. So in this case, let's say, price got into that zone. Let's say you entered right after the candle closure, right? So the candle closure there on the 4-hour was right there for that first candle that dipped into the zone. Let's say you waited for the candle to close, it put a little bit of a wick on it, and you entered right there. For the stop loss, we don't want it too close, right? But we don't want it like too far because it just doesn't need to be far. What we're going to do is, let's say we target the previous highs right there. We'll put our stop loss and see if that makes sense. So that's a 1-to-2 risk reward ratio. And again, we're risking 50% of the account on this. In my opinion, that's okay. Price could come a little bit further into this zone and test down here, but that's okay. Because if it does, then we'll lose the trade. But it'll be a very easy winner if price gets back to these previous highs, because it doesn't really have to go that far, right? And if we're wrong, it'll be a small loss, but if we're right, it'll be a nice little win. So we're going to risk 50% of the account on this one, which would be $4,000 of the account. And we're going to play it through. We'll have to monitor very closely because it looks like price is starting to make lower lows and lower highs. So it'll need to break past this zone for us to win. I'm trying to click it fast enough for us to get through it, but not too fast to where it moves too quickly. So we can see it barely hit the target there. So we'll call that a little win. So what we did is we've made 100% on this account, right? Because for two reasons. Number one, the high risk per trade. When you're using high risk per trade, you're only taking very, very high quality setups, and they don't come very often, right? You may only find a couple trading setups per week or maybe per month, right? It's not unusual for me to only get 2 to 5 trades per week. Last week, for example, I've only taken 3 trades, and currently I'm up about anywhere from $40,000 to $45,000 net across those basket of trades right now. And with that, the outcomes could be a number of things, right? I could end up losing 20,000 on the trades. There's some trades I've risked 20 to 30K on that I might lose, or I might close them early and lose 10K. But when I'm right, not only will I make at least whatever it was I was risking. So for example, if I risked 20K and I'm right, I'm not just going to make 20K profit. I'm probably going to make close to 40K, right? Even after fees and commissions, maybe $35,000 to $37,000. And that's just risking 20K. And that's also having partial losses on that 20K, because usually I might not lose the whole stop loss. There's some trades I'll risk 30K or 50K. It depends on the quality of the trading opportunity. And that just comes with experience and time and looking at charts over and over again. So in this case, this last trade was $4,000 of risk, and it was a winner. And so we were able to win the trade to make $8,000. Because if we risk half the account, but we're doubling the account for every win, all we have to do is go times 2. Now the account's at $16,000. So what this means is that over the course of 2 trades and only a 50% win rate, because we make more on our winners versus what we lose on our losers, this means that we were able to grow the account 60% just within 2 trades. Now again, this is really, really high risk, and you have to be very, very proficient in knowing exactly what you're doing. You have to be able to get an entire trading approach set up, simplified with risk management and everything. And you have to know exactly what to do, because most of profitable trading, among a couple of other components, a lot of it comes from just knowing when to say no. It's very weird. It's like a backwards law where the less you do, the more profitable you are. The less time you spend, the less trades you take, the less obsessive compulsive worrying you engage in, the better your results are, in my experience and in my opinion. And by the way, if you want my personal help doing this, click the link in the description and go to my website. I've got some information on there about how you can work with me if you want, and it would be like one-on-one with me, and I also have a coaching team that can work with you as well. And my team will screen you to see if you're a good fit, and if so, I can help you do all this. I can help you put everything together. I can help you structure everything in a simplified way. We can cut out all the fluff and all the nonsense that you may be doing right now that's kind of impeding your profitability. And then what we can do is we can set you up with something very, very crystal clear, very easy to follow, very, very simple, something that can make you consistent. We'll structure risk based on whatever your risk tolerances are and what your capital is. Again, I wouldn't recommend doing this with under $10,000. You really need to have at least $10,000, just in my opinion, at the bare minimum to be able to do this. And it's way better if you've got like $25,000 to $50,000 at least to trade with, because then you can start making some real money. We've just simulated this with 10K. I mean, if you've got 10K to lose, right? Meaning like you have a net worth that's significantly higher than that. Maybe you have $100,000, $200,000, $300,000 to your name, and you're just wanting to risk 10K trading Forex. If you do that, right, and you're risking high amounts of the account per trade, then you can grow the account very, very quickly. And that's what's beautiful about this. So if you want my help with that, click the link in the description. I'll have some information about that. You can head to my website and you can apply. We're in the process of getting this set up. So if you're watching this video right now when I first release it, we'll have it ready here in the next few days. You can come back in the next few days and check it out. But I'll be more than happy to help you. Me and my team both, you'll get 24/7 access to us. So you can go and check that out if you like. So to wrap this up, when it comes to support resistance trading, you would essentially continue to do the same things, right? So now we've lost one trade and won one trade. We made more when we were right versus what we lost when we were wrong. And now prices at a new area, right? So now we have some new zones. We have this zone above price right here. And in this case, you would just set a trading view alert that it would alert you when price got there. You just use this little plus tool right here. In this case, it just draws a horizontal line, but whenever you're looking at the live market data, that would draw an alert there. And then you'll draw the next clearest zone below price, which in my opinion is still right there. I mean, unless it breaks below it, that's still fair game, even though we've already had a trade off of it. It's a very clearly defined level. It's only been broken above once. If you extend it all the way back in here, then it's only been broken twice. But it's bounced 1, 2, 3, 4, 5, 6, 7, 8 times. So 7 to 8 times it's bounced. So, and then all you do after you've got this set up, right? You want to make sure you're not entering at the beginning of the zones. Usually midway through or towards the tip of the zone's the best. Just because keep in mind, it just makes your risk structure better. If you're entering way up there and your stop is out here, to get a 1 to 2, you got to target quite a bit. And sometimes you'll miss trades. That's okay. But imagine if instead of doing that, you just wait for price to get into the zone. So now your entry is, say, like somewhere down here. And now the same risk reward, you only have to target a small move off the zone, right? Just like we did for the last trade. And this, again, these two trades would make exactly the same amount of money, because on this trade, you'd be risking, in our case, 5K or 4K the account. And then in this case right here, you'd still be risking the same dollar amount, but now the trade's just quicker, because if it loses, it'll probably lose quicker and you're on to the next trade. And if it wins, it'll win quicker and you're on to the next trade. And then all your job to do here is on this pair, you just wait for price to get to one zone or the other, right? So let's say, it goes up there to the next resistance zone. Then it gets, I don't know if it'll get there, right? But the idea would be you wait for it to either get down here, and then if you think it'll bounce because it has a little bit of a movement, or you get a candle closure with a little bit of a wick, well, then you get into the trade, and if it loses, it loses. It'll either hit your stop loss, or you'll close it a little bit early and lose a little bit less. But if it goes up here to this resistance zone, then what you'll do is, you'll sell, right? You'll just structure a sell. You'll try to enter at the zone. Don't enter below it or anywhere else. Make sure that your entry is at the zone. A stop loss a little bit above it, and then a target of, just a 1 to 2, right? If you just have a little tiny move out of the zone, right? That's a profitable trade, right? And that's double what you're risking. And if you're risking 10% of the account, this trade's making you 20%. If you're risking 25%, you're making 50% of the account in one trade. If you're doing very high risk, right, with a dollar amount that's still low enough relative to the amount of net worth you have or capital you have allocated to trade, if that dollar amount is high enough and the risk percentage is high enough, then you can grow accounts very rapidly. Like, there is so much money to be made in trading. And if you're not making a ton of money trading right now, then the only thing in between you and making consistent profits in trading is just a set of decisions. If you have that set of decisions structured in such a way that allows you to get that result of profitability, then by default, you're going to make money, just because you know exactly what to do. You know what the stats, the metrics, the probabilities are. You know, more importantly, what not to do. And this allows you to get to profitability in a way that is really effortless. Like, I personally, I don't look at charts that much. I trade, I invest in stocks and crypto. I trade Forex. I have winning months. I have a couple losing months every year. Some years I have anywhere from like 3 to 5 losing months, and I still make money. Like almost every year, including last year, which wasn't the best year I've had Forex trading. I still made money, even with huge losing streaks and losing like a couple months throughout the year. And so it's really beautiful when you have a trading approach that allows you to do essentially almost nothing, right? Because you're looking at charts like just a little bit per day, but you're able to make so much money. Like, you don't even understand the ridiculous amount of money you can make. I think it was Tuesday. It was either Tuesday or Wednesday of this past week. I was watching my crypto portfolio bounce up, right? I had bought Solana at a support zone. And so, I'd moved some of my Bitcoin over to Solana because the percentage gains were higher. And then Solana then bounced. And then there was one 24-hour period. Again, I think it was either Tuesday or Wednesday, whenever price spiked up. I'll show you the exact move right here. I made $350,000 in a single day off this move. So price came down here, it jumped above this zone, and when then it popped back into the zone, I thought this was essentially going to go up, right? And plus, when I was looking at the daily chart, to me, it was clear enough to be able to place a trade off of, right? So we have support right here. We have a set of highs. We had price pull back into this zone. It's already been making higher lows and it started to take off. I ended up buying right here. So it was around 165. So, right in this area as it started going up. This spiked up. And for this right here, that was a 25% move in one night. Right, and I had maybe like $1.5 million worth of this token, Solana. And that was just in one night, $355,000. And now it's since pulled back, right? So now from this same move that I'm in, I'm probably only up maybe like $180,000. But still, that's relatively insane, to think about how you can get into a trade like that and you can make that much money, and that's just in a single day, right? And of course, that was the single biggest trading day in my trading career. I've had a couple days in my trading career where I've made above $200,000 for a day, and then I've also had a couple more days, the vast majority of which that I've made over $100,000 in a day. But even having a day where I make $10,000 to $20,000 trading, that is still beautiful, right? That's more than enough money I need. I live very, very simply, right? And I don't need a lot of money to live. I probably only need about $20,000 per month to pay all my bills, okay? And I live a very nice life. I've got nice things. I've got a nice home that I live in here. We live in a really nice part of town. It's beautiful. We've got a nice view. I've got 4 cars that I really enjoy. I have everything a man could ever want, but the main thing I have is freedom. And the reason I have that freedom is because I make just enough to live, and I have a really, really relatively simple, basic life for my income. Because there's some months I can make anywhere from $100,000 to $300,000, and yet I still live very, very simply, and I only use like after tax maybe like $20,000 a month, and that's for everything. That's like all food, water, expenses, groceries, health insurance, like all sorts of stuff. My dog's health insurance is $350 a month. So I'm trading here for my dog, right? I do all this so my dog can have a good life. But trading allows you to be able to have so much freedom with your time, with your finances. It allows you to just be able to wake up every day. I mean, you don't even honestly have to work some days. Like you might wake up and glance through charts for 15 minutes and realize that price is nowhere near one of your alerts at the zones. And so what you'll do is you'll just decide, you know what, like there's nothing to do today on the market. So I'm just, the price is really far away from one of these zones. I'm just going to set my alerts. And if I get an alert, I'll look at it later. But if not, I'm just not going to do that. So then you go on like a 2 or 3 hour bike ride, or you just go for a walk in the park, or you just get in your car and you drive to the grocery store and just wander around the grocery store. And you have so much freedom when you do something like trading because you can do it from home. All you really need is like a computer or a phone and an internet connection. I really recommend using a computer and not just doing this all from your phone. I use my phone to monitor and look at trades like, TradingView and then Coinbase, and then my Ledger wallet, and then MetaTrader 5 with my broker. But I do most of my stuff, it's based on the computer. So really you just need a computer and an internet connection and some capital to trade with. Again, at least $10,000. And with just the right skill set, right? With just knowing what to do and what not to do, and knowing what decisions you need to make, you can make so much money trading. And only a small percentage of people who try trading are ever going to be able to do that, right? Like I'm in the low single digit percentages of people who have been able to make something of trading, right? And it's still sort of like a pain in the ass for me at times, watching like a whole month of work, and I've taken maybe 10 to 15 trades for the month, and then I end the month either break even or barely in profit or down like 20K, 50K, 80K, 100K. Stuff like that, right? It's still a pain in the ass, but it's so simple and so easy for me to do because I've been doing it for so long. And my wish for you is that by simplifying your trading approach and then structuring risk in a very clean cut, clear way, it will allow you to be able to do the same sort of thing, right? Even if you're not making like $100,000 a month, if you're only able to make like, I mean, even just like $10,000 a month, right? There is so much money to be extracted from not just the Forex market, but the stock market, the cryptocurrency market, and every other market you could think of. You just have to know what to do and how to do it. And again, if you want my help, I'd be more than happy to help you. Just like I said, click the link. We'll have it here in the next few days. We'll have a link in the description. You can go to my website, learn a little bit more about it. My team will screen you. You can like fill out an application. You can jump on a call with us. We'll talk about where you're at in your trading, and we'll see if we can help you. We'll see if you're in a good spot where we think that you're probably likely to get profitable anyway, and that we can just kind of help guide you there a lot quicker. So if you'd like to do that, there'll be a link in the description. And I hope this video was really helpful for you. So if you're new here to my channel, I'll be posting more videos like this on my channel. So welcome in if you're new. Feel free to subscribe if you feel like it. Feel free to like the video if you feel like it. And leave me a comment below if you have any questions or you want to ask me anything about this. And if I think I can help, then I'll respond to your comment. I'll see you in the next video. I had a lot of fun making this video, and I really, really hope it was helpful for you. Cheers.